Hi, welcome to the Market Alert for Monday, the 19th of February 2024. So Bitcoin Black Gold bid as stagflation fears wreck 52-year-old equity win streak for the S&P. So that's a shame. Friday's sell-off at the 89% retracement stopped that winning streak. Also, stocks and bonds sold on hot PPI but dollar pairs gains on soft UOM news. So again, bit of news there stopping the market moving higher. Today is a bank holiday for the US. It's President's Day today, so all government agencies and banks will be closed. We've also had the Right Move house price index that was released at 1 minute past midnight. That came out 0.9. There was no forecast for that one. 11 a.m. we've got German Bubba monthly report. That's it. So no news really to talk about. Market will have to make its own direction today. Speaking of which, let's have a look at Friday, which started off well, but it ended in a bit of carnage. So in Friday's Market Alert, I spoke about the market retracing to 89%. It did exactly that right on the button, and then the market sold off. And overnight, at the moment, the market's trying to make a bit of a recovery and head back. As I said, this 89 is a very special area when you have a move like this back to the upside, particularly when you're making new all-time highs. The market will have to find a way of driving through this, and given there's no economic news today, unless something of a geopolitical nature comes out, the market is free to move back to the upside. In the intraday session, you can see that the market was nice and sideways until the news at 1:30. Then the market reversed and moved to the upside. This 89% retracement high there is where the market stopped and then sold off promptly all the way back down to where it had started. Around what time was that low put in? That was at 15:30, an hour into the trading session, when the market moved to the upside. And then in the evening at 19:30, 7:30 p.m, the market then selling off. Overnight, the market sideways, but it needs to take out the DP, the 20-bar moving average, the 50 EMA, in order to move higher. It's trading currently very close to Friday's close and also the low as well. But it's President's Day, no economic news, electronic session only for the US there. In the German DAX, well, a round of applause. Markets put in another all-time high, 17,198. It's easy to remember, 17,200. Market moving up on bad news all around. Inflationary news from the retail numbers on Friday at 7 a.m. However, the markets are now back above the 5-bar moving average, having been below it overnight. You can see there the market up and then all the way back down in the evening of Friday as the Dow moved lower, and at the moment coming off the lows overnight barely, but again at the 20-bar moving average 50, and it needs to get above the DP. However, keep an eye on this market from this high to this low. Watch the 17,120, just to give a round number there. The market could have a bit of a struggle there, and then you've got the resistance to the left as well, where you saw the market sell off. In the S&P 500, this too trading up to the 89, well, just through it and then back down, but still looking very, very strong despite breaking the 52-year winning streak. 30-minute charts sold off, rallied back, sold back off, and is moving back up towards the DP on the overnight. Like I say, there's no news or anything really to move the market to the downside. So again, it'll be a classic Monday when the markets might move down to begin with, and then by mid-morning start making its way to the upside. In the FT 100, also trading up to 89% retracement there and stopping. Been a good 3 days for the FT there, moving higher despite the news and the GDP figures and going into recession. A true reflection here of the market's reaction, given they really, no, I'm being genuine here. This is how it reacts. It takes bad news and turns it into good news. And holding really well when you look at this market up, doesn't get the big sell-off like the S&P, the DAX, or the US markets, and holding well above the DP as well. The only one needs to get back above the close and the high, and I suspect this too will do this during today's trading session. US dollar making its way back down there after the CPI and the non-farm payrolls of the week before last. And let's have a look at the metals. So silver slammed overnight. Gold isn't, but silver is back through the 62% retracement there from the high there down to there, and then projected back up. So just back below the 62% retracement. There you can see Friday the market was happy to move higher once more, but boy, they came out and hammered it overnight with some serious amounts of selling their paper silver, not physical. Market sideways at the moment. I don't know whether it will get back above the DP or not, or it's over for the recent move in the silver market, so they can go back down to the 21.87 level, which for me would be what they're trying to do there. Given the fact that gold is actually moving up towards 89% retracement, 50 EMA and 20 bar moving average there. So a bit of resistance for gold, and any sort of sell-off in gold will accelerate the silver smash overnight as well. So a bit of a sell-off in gold on Friday, which we didn't get in the silver market, just to remind you there. Back to the 30-minute chart. It spiked down but then came back up, whereas gold spent a bit of time on the lows there before moving up, but continues to move up. There's no slam of gold overnight, just in the silver market there. So let's have a look at the gold-silver ratio, and what a surprise, a straight reversal off Friday. No, like I say, no surprise. Just a matter of getting back above 88, and then we go back up to the 92 area there. Okay, let's have a look at the trades for Friday, and then a quick look at the overnight markets before we conclude. So during Friday's session, the market reacting to the retail sales numbers coming out at 3.4%. Apparently this is good news, but it's not. It's inflationary. And then the market through Thursday's high, we had a potential sell signal there that wasn't filled, and then we had the market bouncing off the high. And as I've always said, they want to keep the market moving up if they can, get it off the high as well as the lows. Market struggles for a bit and then start trailing the stop up, and you'll see in a minute as the market then comes back and moves up. I then take out the profits as the market comes back below the R1. So I'll let this one breathe a bit because I've noted the upside, obviously, or the long side is the better side. You just get a bit more, it's a bit spiky, a bit volatile, but continued to make its way back to the R1 there. So that was it for that trade. I could have hung in there a bit longer as well if you noticed that, but a profit's a profit. Then we get into the afternoon and the market's broken the high. It's made its way back, and then price is moving to the downside there as the Dow started to show weakness, having traded up to the 89%, and then it, of course, it went down to the DP, found support, and then made its way back to the upside, and then headed back towards the high as the Dow was brought back as well. Quick look at Friday's, we looked at Friday's trade, so let's just have a quick look at the overnight. And you can see the market there stuck in a sideways range, very quiet. So it's come off the low which we saw earlier just after midnight, so it's a bit further back here. So there the market coming down towards the low, having a look at it, and then moving back. And overnight at the moment prices are sideways, and there we can have a look and see where we are with regards to the low. We're closer to the low. It needs to find support at the close, but once you get through the DP, you've got the R1 and Friday's high. And it wouldn't be of any surprise if the market managed to move back to the upside. Okay, that's it for this one. As ever, thanks for watching. I will see you in the next one.